and welcome to Pro Trader Strategies Market Commentary for Thursday, April the 30th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about everything from like the economic data, the geopolitical environment, and how that impacts the overall markets. Well, I do that same stuff in these daily market commentaries, but I layer on top of it some option strategies that I find to implement into my portfolio. And what I'm here to do is actually teach you those scenarios that you might very well be encountering yourselves, and then show you some guidelines that we use in order to implement these option strategies in accordance to what our directional assumption is. So if you have a bullish assumption, it's not always just going out there and buying calls. There are certain scenarios we need for that in the environment, in and around that underlying that you're looking at for that bullish assumption. So I go into a little bit of that into these daily market commentaries, but I really drill down on that in my webinars that are on Thursdays. Like today, we're going to be doing one on the iron butterfly and the right scenario for something like that. All right, without further ado, let's get on with the economic data. Across the pond, we've got some good stuff coming out. It's not really the major market impacting type of economic data, but we did get European CPI flash estimate, which is consumer price index. Flash estimate came in at 0.4%. That was slightly higher than what was expected at 0.1%. Core CPI coming in at 0.9%, expected to be 0.7%. Now, remember, core CPI is something that the consumer is going to buy, excluding food and energy, alcohol, and tobacco. So those are being stripped out. So a lot of driver in that being the food, energy, and alcohol, probably as we are all sitting at home and people are buying food from the grocers, and a lot of alcohol I'm hearing from the sales there. Something to note, a lot of these beer distributors are the people that are producing beer, especially your smaller craft type beers. They've got a lot of beer sitting in kegs right now, and a lot of people are wondering, are we going to see something similar with these kegs, the big kegs that usually when you go to the restaurant they're pulling out of a tap? Well, those could be starting to plummet because they only have a certain life cycle. If it is non-pasteurized, it's only going to last for about 3 months. If it's pasteurized, it will last for up to about 120 days if it is put under pressure and cooled. But you know, with this coronavirus going on, there's kegs sitting out there that are kind of getting ready to get skunked. So keep your eyes out for that. Some people are talking maybe go out and buy a kegerator and maybe find some cheap beer that way. Get some of that off the market there. Go to your local craft guy and say, hey, you got any kegs you want to sell for cheap? You might be able to get that done. Anyway, it's all about supply and demand, right? All right, let's move back over here to the United States, and unemployment claims coming in at 3.839 million. Unemployment claims expected to be 3.5 million, so better than what we've been seeing, although they did revise last month's number up a little bit, so that's not really what we want to see. Still seeing those layoffs and those people that were furloughed expecting to come back kind of getting laid off at this point. And a lot of that's to do because we're coming up to the end of April here, at the end of April, and we're seeing a lot of states extend this stay at home for another couple of weeks into mid-May. So a lot of people are probably, or a lot of companies are probably saying, all right, that's about it. We're going to start having to lay off because we just can't sustain anymore. Something to note, Hertz rental car is considering bankruptcy at this point. Nobody's driving, nobody's traveling, nobody's needing car rental services, so that's getting hurt. Lyft, Uber, those guys are talking about laying off a lot of their people because, again, nobody's traveling, nobody's needing car services, all right? So those guys are really getting the pinch at this point. We got personal income coming in at negative 2%, expected to be negative 1.6%, so worse than expected there, obviously. We've got our own core PCE, which is personal consumption expenditures, negative 0.1%. That was in line with expectations. One thing I was a bit surprised about here was personal spending came in at negative 7.5%. Yes, it was expected to be negative, almost negative 5%. Some people were expecting negative 5%, but it came in a lot lower than that. And I've been talking about a lot of people being online would probably go out there and spending some of that extra cash that they're saving on gasoline, not traveling there, not doing any type of spending outside of the home, that they would be sitting in here in quarantine and buying online and actually making up for that, maybe even going over and above. But it does not seem to be the case. So that is a little bit of disconcerting to the overall economy, actually. And then we've got our Chicago PMI coming in at 35.4, expected to be 38, so lower than expected there. Not quite as bad as what we've been seeing in other major states or major cities, but that's purchasing managers index. And we would expect the manufacturing sector to be lower, but this is one of the lowest readings we've seen in quite some time. And then later on, we should be getting natural gas storages coming out pretty soon. Natural gas storages coming in at 70 billion, right in line with expectations at 70 billion. One thing to note with this, natural gas, keep in mind, is a byproduct of fracking. Fracking is getting really down to a minimum production, and so we could start seeing some of that natural gas, start to come off a little bit, all right, which would be a little bit more bullish for natural gas prices. The other thing is we are going into the summer, and a lot of people are going to be using a lot less natural gas, so that could be offset. Just something to keep in mind going forward. I don't usually play in natural gas, but it is something to keep an eye on. All right, we've got crude oil moving higher by about $2.60 right now. Some of that was based on the hopes that we are going to get back going. We're seeing like a lot of the car dealers really get hurt. Tesla actually knocking it out of the park and really going full throttle on it, but we are seeing crude oil get a bit of a bounce here, up $2.50 on the day, but I don't think that we're going to see that 20 handle anytime really soon, especially if we start seeing these states hold on to these longer mandates of stay at home. All right, we've got gold moving higher by about $4.50. I talked about that. I think it's going to stay in the 1700s for at least the foreseeable future. The reason why is because the Fed yesterday, something I forgot to talk about, we had the Fed meeting. Powell basically saying we are going to throw everything at this. We are keeping a diligent eye, and we are going to be there to do whatever we can to make sure that this market and this economy is ready to go. When we're ready to get back to work, that they are going to be there to support that and make sure that it is pretty seamless. So they don't have a great outlook on it. They don't have much of an outlook. They're kind of day by day. They're looking at the data just like we are, but they said that they will be there to support this as it goes. So I think that that's giving a little bit of a lift to gold. It's also because we are seeing a little bit of weakness over there in the equities, which we'll get to in just a moment. But bonds moving higher. Something I've been looking at, the longer this goes on, as we start to see these states extend these stay-at-home or these quarantine type situations, like another couple of weeks, that we actually, my range on being between 185 and 180 is going to be in jeopardy, especially that 185 handle. We could easily see that push higher and maybe even test these historical lows if this continues, because we are starting to see this start to really erode away at the overall economy, which is going to drive bond prices lower in the future. So I'm not going to start shorting this. I might do it on a spike, maybe look at some of those TLT short calls, get a good strike location, but I'm not going to jump in line with trying to sell those TLT calls to lower my overall cost basis on my bond portfolio right now. If we start getting a spike and I start seeing it approach that 191 handle, or maybe get up there at around that 185 handle so I can get a really nice strike location, that's when I'm going to do it. But as of right now, we've been bouncing up against this 183 handle. Let's say that's been the real resistance area. But I break above this line right there, I'm going to be really on the defensive around those bonds at this point. VIX is starting to move higher by about $3, as you can see. We lost those 40s, but that doesn't mean it is out of the ballpark. We could easily see this market start to move up because we've been talking about this. We've had such a sustained rally back up into the value area, and some of these equities, some of the indexes are showing that we are at where we were at the beginning of the year, all right, or heading into the beginning of 2020, which is a little bit of a mind-boggling scenario because we know the economy is shut down. We went from 3.5% unemployment to about 15% unemployment, and there are a lot of people struggling. We're going to see a lot of bankruptcies and things of that nature. So a massive rally like we've had does seem to feel like there is a need for a little bit of a pullback. I don't want to see lower lows. I'm not saying that, but I think that we need some more, pullback, if you will, just to shake out some of those weaker hands. I talked about it yesterday that there is a huge influx of new money or newer traders. You know, if you look at Barstool Sports, you got Davey Day Trader, all right? Guys like that who haven't been in the markets a lot are slinging around money, and those are usually the weaker hands that we could see start to be affected by some of these pullbacks, all right? You know, they're going to want to dump quickly. All right, Nasdaq off by about $67. Again, I think the Nasdaq is well overdone. We can see if we go back to the beginning of 2020, and we are above that. So, you know, one could say that we are higher on the year at this point right now. And that, again, is when we were talking about the economy being one of the strongest economies we've ever seen, right? And now we're talking about one of the weakest economies we've ever seen, going back to almost the Depression. Okay, so that doesn't make sense. There's a little bit of a disconnect there for something like the Nasdaq to be up on the year. I think that there needs to be a little bit of a pullback, despite the fact that we did see some great earnings out of some of these companies that are in the Nasdaq. A lot of these tech companies are going to do very well on this as people are building out their home theater or their home office at this point. E-mini S&P is off by about 33 points. Again, back in that value area I talked about, I think we're going to see this toggle back between 3,000 and maybe 2,700-ish. 2,725 is where my line in the sand is, but I think we're going to see some market movement back and forth from there. We definitely want to see something like the E-mini S&Ps hold on to this 2725 area as support. It's acted as support again, but that would create a lower low, which we don't want to see. That would mean that we're looking like we're starting to want to roll back over to the downside. All right, let's look at the overnight trade here. We did finish on the highs yesterday. Maybe some profit taking going on as soon as the market opened, but we got a nice pump out of the markets on some of the earnings we saw, and some of those earnings were out of Microsoft. Facebook came out with really good earnings, so those guys were looking very good on their economic outlook. So the market, I think, is now starting to realize, hey, we're starting to see a couple more states say that they are going to stay closed. And that could hurt overall. All right, let's talk about some of the trades that I have on. I didn't really do a whole lot with some of these. Facebook, I already had covered calls against it on the expectation that I'd be happy to get called away where it was. But let's talk about Microsoft first. If we're talking about with Microsoft, you guys know that I have on this trade as a long at 160. So doing very well on it. I also sold some puts at 155. I also sold some calls at 195. Now you can see here the high
was printed overnight. Actually, let's go break this down into the 15-minute chart so we can see where the highs were and everything else. The highs were being tested 186, and that is based on Microsoft coming out. They're doing very well, right? I've talked about this, people building out their home office. A lot of these people are working from home. Well, they have Azure, which is their online cloud services. That is knocking it out of the park. I think it was up like something like 27%. They also are seeing a lot of people go out there, buy the tablets, things of that nature. People subscribing more to the Office 365, which is associated with the company's website. 396 million subscribers there, up 16%. So a lot of people are building out these home offices like I talked about, and obviously Microsoft being one of these major businesses that are associated to that are doing very well. So the cloud services, their Microsoft Teams, Microsoft Teams is kind of like Zoom. I don't know if a lot of you guys know about Microsoft Teams, but you can do those same type of video conferencing through Teams as you can with Zoom. Now, we've heard a lot of bad things going on with Zoom where they're hackers are coming in and stealing people's passwords. Well, Office 365 is a little bit more secure than that, and they have not seen those type of problems going on over there in that. So something to talk about with Microsoft Teams communication. 75 million daily active users, and that's up from 44 in mid-March. All right, so literally almost doubled those active users as people figured it out and have started doing that. There was over 200 million meeting participants in one day on those Microsoft Teams. So again, home offices, things of that nature are going to do well, or people that are building products for that type of scenario are doing very well. All right, Facebook had a nice move to the upside. They actually started talking about where they're seeing some of the ad revenues or the ad sector of their business level out a bit. In March, they were getting pummeled. Now it's starting to level out a bit. Again, we're starting to see more and more eyeballs on Facebook. So they are seeing that build, also an 80% revenue growth in some of their products, like their video portal products that are going on with that. They actually sold out of some of those products at Best Buy and other places. Some of that having to do with supply chain issues, and Microsoft's having the same supply chain issues also with the Surface tablet. But Facebook, ran out of some of those products, but that is an indication that people are looking for things like that microphone and that camera. All right, so those are going to be things I think that we are going to see really accelerate in this type of environment, at least for the foreseeable future. And I really don't know that that's going to slow down as people get very comfortable working from home. Some say that you'll be less productive. I'm on the flip side of that. I think a lot of times when you schedule these video conferencing and things of that nature, that people will get a little bit more done throughout that. All right, so that's all I've got. As you can see here, I am short Facebook. I am long at 175. That's doing very good. I had sold the 200 calls against that. That expires on in 15 days. So it looks like at this point, those are going to get called away from me, which is a nice trade, right? You bought at 175, sell it at 200. I'm out. I'm not one of those guys that really wants to hold on to Facebook for a really long time. My Microsoft, I'd be happy if it got called away from me at 195. So not too worried about that. So that's all I've got. Hope everybody has a great day. Keep in mind, we are doing the webinar today, and it is going to be on the Iron Butterfly. This is a strategy where you can get a lot of premium collected, especially if you start to think that we're going to settle down a little bit in an underlying, and I'll go through all of the details on how to set that up. today. It's a guideline where we can go step by step to figure out for our market assumption if this is the right strategy and when it is the right strategy. But please take a moment to go over the disclaimer here. As we are an educational company, I'm not here to solicitate, hey, go out there and buy Facebook or Microsoft or any of these stocks that I've been talking about. These are used as examples of how we attack or how we go into our portfolio and increase our probabilities of success. All right, that's it. That's all I got for you guys. And if you can't take that, take it easy.